All right, ladies and gentlemen, hello, good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Friday. Should have been an interesting day, but it's not. Well, blame the government shutdown, U.S. government shutdown, yeah. We'll talk about markets. We'll see what's happening. I mean, there are still things happening, but certainly we're not going to get the NFP. But all about that and a little bit more in the webinar right now, so stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Friday, ladies and gentlemen. Finally, we've made it to the end of the week. As I said in the intro, should have been an interesting day, but we'll have to find that interest somewhere else. And of course, there are certain data that is coming up could become now the more important one than the NFP. So if you don't know, the NFP got canceled because the Bureau of Labor and Statistics, because of the government shutdown. So basically the Bureau of Labor and Statistics is not working, and they're not delivering the data together with the yesterday's initial and continuous jobless claims. Look, about all this in a moment. Risk disclaimer: hey, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm also gonna put in the usual good morning in the chat room. Good morning, everyone, ladies and gentlemen. Yep, good morning, everyone. So also, don't forget to message me. You can always chat here, ask questions. Feel free to do so. Look, it's an open discussion, and feel free to ask questions. If I know the answer, I'll tell you I know the answer. If I don't know the answer, I'll tell you that I do not know the answer, but I will find the answer. Anyway, ladies and gentlemen, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, the economic calendar, very quickly. Look, today, let's have a look. Let me refresh this one very quickly. So Friday today, we should have received the non-farm payrolls. The expectation was for a number double than the previous. However, to be honest, as I said to you in the beginning of this week, I talked about the on Monday I talked about it in the week ahead, and also I delivered some videos here, separate ones on the U.S. job numbers. So this is the moment when I recorded this. We didn't know that the government will shut down, well. Look, still, nevertheless, the analysis is still valid on everything on the matter. Anyway, look, okay. First of all, looking at the day today, Friday, what did we get? We got the Australian S&P Global Services and Composite PMIs, which came out a little bit on the lower side, so that's kind of fine in a way. Japan. Okay, look, the big topic is going to be Japan because as one of the viewers actually stated on Monday, actually reminded me kindly that there is an election happening on Saturday or Sunday, basically during the weekend. In Japan, they're going to be choosing the new prime minister from the Liberal Democratic Party, from those members, and because that's the majority of the right now, and they're going to be choosing from that one. Anyway, there are some interesting candidates. There's one that I heard that is in favor of cutting rates, or actually even holding them for now. But the others are in favor of kind of increasing, or going for a hike. Anyway, let's keep an eye on that one. Certainly, we'll keep an eye on the Japanese yen. If you have any positions on the yen and you want to keep it kind of, keep it over the weekend. Look, whenever we get something like that, normally I don't believe that it will get us some sort of like a major shock or something like that, but there could be some volatility. So in a way, which you could come back on Monday too, you could see some action and maybe even, let's say, a spike here and there. So just be careful. Just be careful because again, it's really, like I said, it might fire, it might not fire. So that's, we want to kind of limit our risk carefully. Ladies and gentlemen, who's tuning in right now, feel free, like I said, to message me here on the chat, ask questions, and yeah, we'll go from there. Look, also, what did we get as well? We got the Japanese unemployment. Yes, so 2.6 here came out very bad, I would say, against the previous 2.3. Normally, you get like a shift here and there, like by 1/10%, but this time here we got a 0.3%. Well, I would say this is a little bit of a problem. A problem, yes. S&P Global Composite and Services PMIs as well came out on the composite on the lower side came out higher than the forecast, to be honest, but then the services is actually higher in general. So okay, higher than the previous. Now look, we got the governor away the speech this morning. We saw a little bit of shift here and there, but nothing major. I think the market is kind of preparing more for the election itself. And also looking at the other numbers here. So from Europe, we're going to be getting the composite and services numbers as well. Composite and service PMIs, the final ones. So keep your eyes on those. Again, for Europe, look. Germany, we're watching carefully. We're expecting good numbers. Normally, they come out kind of close to forecast. So but the interesting bit comes in when it kind of deviates a lot. So that's when the excitement comes in. That's when volatility kicks in. So keep your eyes on that. UK as well, S&P Global Composite and Services PMIs are coming out. So those are expected to be a little bit on the lower side. European PPI, yep, that's interesting. So we are expecting a lower number in year on year. Wow, okay. Deflationary pressures, interesting. So and if that's the case, then let's see what the ECB does next time, because again, their rate is at 2.5, if I'm not 2.15, sorry. I mean, for them to go for another 25 basis point cut, okay, look, I mean, they're going to drop it to below 2%. Interesting, very interesting. So we'll see how that plays out, of course. So yeah, going further today, we don't have the long-awaited NFP, so maybe next week we'll see. Again, it depends on the U.S. government. But the unemployment rate is expected to come out the same, basically, but the problem here is the NFP. Look, I talked a lot about the US job numbers in this video, so I'm not going to focus on that. I'm going to jump into the charts in a bit, but yeah, if you want to watch, I mean, this is still valid, so you can have a look at that video on our YouTube channel. Ladies and gentlemen, let's have a look at what else we're going to get today. To be honest, okay, sorry, I almost forgot the ISM Services PMI. This one will be the more important number, because this one just basically it's like taking the spotlight due to the absence of the NFP. So this one is kind of going to be the market mover today. So keep your eyes on the ISM Services PMI. Normally I would say just keep an eye on the NFP, but no, not this time. Basically, yep, we are gonna see. We are going to see some action probably on the ISM Services PMI, and it is expected to come out on the lower side. The problem here is that we're getting closer and closer to contraction territory, and if by any chance it comes out below 50, again, it's a very tricky moment then. It's the markets are at all-time highs. Maybe the stock market could rally just basically on the point that the market would think that, oh, the Fed will actually go for more cuts, because again, we're having this government shutdown problem. We're having a low ISM number, and yeah, this is you need to go for the two cuts at in the October meeting. So Let me just have a look here. Um, uh, so yeah, at the moment we're expecting only one, but it can change very quickly. So for example, you see here already we have almost like 100% probability for a cut in October, and yeah, I think that's what's gonna happen. December time, we're expecting two cuts. By the end of December, we're expecting basically two cuts. So coming back to October, this percentage here diminishes very quickly, I would say. So I wouldn't be surprised if suddenly we could see a forecast for two cuts in October. So two cuts in October and then one cut in December. So yeah, very different game plan to what was expected in the beginning of this year. And honestly, I said this in the beginning of the year. I said, we looked at the this Fed watch tool, and we were expecting, I think, only like two cuts or something by the end of this year, maybe even like one. But yeah, it shifts very quickly, so you cannot really, you have to go day by day almost, in a way. You have to keep an eye on the markets and what's happening. And looking at this picture, like I said, I'm expecting this to pop up here, a small little probability for a two cut in the month of October. Let's see. Again, let's see what's going to happen. Anyway, looking at the, like I said, looking at the economic calendar, so keep your eyes on the ISM. Check out the time when it's coming out in your region. And if you are trading something US related, be careful. Anyway, Nikkei coming out very closely here, very nicely. Look at this. Look at this move here. I mean, look, the market is rallying. The market is loving right now the whole tech world, and everybody's loving the tech world. Look, I don't want to be the bearer of the bad news, and I think every people will start thinking that I'm some sort of like a pessimist or something like that. But what comes up must come down eventually. Certainly, I can keep on talking about this idea for like 5 years, and then after like 5 years it comes out, and I'm like, I told you so, right? But for 5 years, I mean, I could have been long, right? So that's what I'm saying. I'm not really. I'm just saying that be careful. In a way, we are at very interesting levels right now, where gold is like crazy. Stock market is just continues to go up and up on the bad news in general. The bad news are hitting the wires, but I think that the market is so like focused on the Fed right now that we're gonna get more cuts, and that's where the rallies are happening. The U.S. job market is in shambles, in my opinion. Like it's bad. In terms of there's not many layoffs. Your unemployment rate probably will remain the same. It's the job creation. I said it several times, and I'll say it again. I said it in the video, and I said it in the previous videos, and I'll say it again, that AI, yes, everybody's right now enjoying the AI bubble. Is it like is it a bubble? It's a questionable moment. Is it a boom? Yes, it is a boom, but is it a bubble? Look, in a way, somebody can say yes, somebody can say no. We're all, we all view things differently, so we all have our own reasoning. But yeah, it's in a way it does. If whoever's going to say that it's a bubble, they're not going to be wrong. It does look like a bubble. Whoever's going to say it's not a bubble, is just like progress and everything, you're also going to be right, and that's the problem right now. You cannot really, it's a stick with two ends. So what I can say here right now is that the Bulls are enjoying the ride, and I think that they have the full right to do so. And I think that there could be some more upside. Looking at Nikkei here, Nikkei is rallying. I mean, I think that there could be some more upside here on Nikkei. Again, of course, we'll keep an eye on the elections and Japan and what's going to happen. We're going to look at this on Monday, so don't forget to tune in to Markets Talk on Monday. But look, in general, from the technical perspective, if we do clear this barrier, the 45,850 zone, somewhere there, it's never the exact level. It's always the area around that level. So if we clear this and we stay above it, great, I'll go higher. But if we don't, look, maybe we could start ranging here. And I want to look at the monthly chart, to be honest, here as well. My mouse, my scroller doesn't work, so I need to use these. Need to get myself a new mouse. Anyway, looking at this picture on the monthly chart, look at this. 1, 2, 3, 4, 5, 6, 7, 7 months in a row, we're in positive territory. Oh, like, okay. When were we here like this before? Like, when did we have a rally like that for 7 months in a row and nonstop? So maybe here, 1, 2, 3, 4, 5, 6, 7, 8. 8 months we had here. It was back in when? Back in 1988, ladies and gentlemen. Back in 19, okay. This was a good rally, and then since then we had a major collapse. I don't want to say anything, but in general, I will be targeting this area. I will be very closely monitoring this, the highest point of 1989, near the kind of, it's below 40,000 mark here. So I'm going to aim for that. But first, I need to see a reversal. Look, ladies and gentlemen, we are at very interesting levels, at very interesting times. We are like watching this very, very carefully. So, I mean, in general, I am really itching to press that sell button, but again, you cannot do that. Why? Because there is no signal yet. So we need, in general, on the contrary, everything is pointing more towards the upside. Be careful. However, would I go right now long? Look, maybe capturing small little position here or something like that. Yeah, maybe. But judging from this on a monthly chart, I mean, okay. By the way, I have the Bollinger Bands here. If you're wondering what that cloud here is, that's a Bollinger Band. By the way, I'm gonna do a Bollinger Band webinar on Zoom, so the link will be coming soon. It's gonna be in the description of one of my videos. And yep, it's going to be at the end of October, on the 30th of October, just to let you know. So I'm going to be talking about Bollinger Bands and how we can apply them in real live market action. So keep your eyes on that. Like I said, stay tuned. That's the beautiful. These are the beautiful words. Stay tuned. Anyway, so yeah, Nikkei. Like I said, watching this one very carefully. We're near key resistance. If we can clear this, it will go for a new all-time high. I think it's quite doable, so let's see how this is going to play out. I want to jump into China. Where's that Shanghai Composite? This one right here. Again, similar story. We're near key area of resistance. And yeah, of course, the China market is it's closed. If I'm not mistaken, let me just confirm that honestly. Like, yeah. So. Yeah, China is closed, and it's gonna open up in 5 days, right? Okay. Yeah, it's gonna open up in 5 days. Let me just check again when exactly. So they're closed from Wednesday. So yes, Sunday. They're let me just double check when they're gonna open up. October on the 9th. So on the 9th of October, China's coming back. But anyway, it's an interesting moment here happening, and like I said, this index held beautifully near key resistance, near the 3,888 zone, and basically here I would say if we can get a nice clearance of that area, then of course I will go to the upside. At the moment we're watching this very carefully. Again, it will be a surprise where it's going to open up, in my opinion, because again there's a lot of days before China will come back. So we need to be, I would say, be cautious, be careful. If you have entered the position and now you're stuck with it, well, I would say, wait for a surprise. You should have not done that. Anyway, Dow Jones Industrial Average, looking at this one, beautiful movement to the upside. Yesterday, Dow one of the okay, it was the second best performer. Very interesting actually yesterday. Normally the S&P is somewhere in between Nasdaq and Dow all the time, but it was one of those rare occasions where Dow was the second best performer from the top three. Nasdaq was the top one, and then followed, like I said, followed by Dow, followed by the S&P. Normally the S&P is somewhere in between, but anyway, well, you get one of those days. Anyway, we are looking at the barrier here, the all-time high near the 46,714. If we can get a nice clearance of that one, great. I'll go to the upside. If we can get that move, wonderful. For the downside, I would need to see a drop below the 45,785 here in order to shift my attention towards slightly lower levels. But look, if you're really, looking for something very, very short term, you could potentially consider this little upside line right here, and if it gets that clearance, then we could see a move to the downside. So long story short, if you're looking for some lower levels, then yes, I need a break below this upside line. If we're looking for some higher areas, then yes, I need to see a break of that 46,714, and then we could take it from there. The S&P 500, all-time high yesterday, great, wonderful, but then it retraced back down a little bit. It was still in positive territory, but yeah, it did retrace a little bit lower. Nasdaq, similar, yes, it pushed higher, but it retraced after that. So this is the main index. So I'm seeing data here during market trading hours. So this is neither the cash index or anything. This is just pure performance here of the index when it trades during its hours. So what's interesting here today, if we do get a little bit of a retracement, I'm wondering if we're going to get some sort of like an island reversal here. That's going to be an interesting moment, so let's keep an eye on it. But in general, hey, Nasdaq new all-time high yesterday, so maybe it's going to go further north, but for that I need to see a push above the current all-time high. If we can get that move, wonderful. Yeah, I'll go for higher levels. The German index DAX. The German index DAX, we are at, we're almost at the all-time high area. Look, this is the all-time high, and hey, the 24,639, if we can get a nice clearance of that one, great. I will go to the upside. But for now, I'm watching this very, very carefully. Oh, excuse me. If we do fail to reach the all-time high, and we start reversing earlier, to me that could be a little bit of a worrying sign. Another worrying sign is, which I already mentioned in my previous webinars, that if we do overcome the current all-time high, then it becomes the previous all-time high. So then if we see the body of the daily candle, or even better, the body of the monthly candle staying below the previous all-time high, then hey, or previous month's all-time high, then yes, this could be, like I said, a signal. So you go create a new all-time high, then you beat the current one, and then you reverse below that, and you stay below, and you close below the, well, already at that moment it's the previous already all-time high. So long story short, for now we're, like I said, watching. If anybody's trading DAX, let me know, because that's one of the interesting indices here, which has performed quite a lot this year, to be honest. And I'll show you, I'll just in comparison. So if we take January 2nd when it opened up, yep, January 2nd right here. Look at this. We have gained around 23%. If we're comparing this to, let's say, Dow, maybe. Let's have a look. December. You're straight away you're gonna see that it's less. So yeah, something like that. 10%, but like 9%, not a full. So yeah, and let's say Nasdaq, which, okay, let's say technology drove the market higher, which is fine. Let me just check this one, and there we go, boom. So technology was like around 18%. Now, okay, that's a good gain. Don't get me wrong, but yeah, technology. I mean, with all everything what's happening right now with the AI, with how much money is everybody spending on AI? In my opinion, this is more of a show, more of a I don't know. Like this is how you can maybe put the money through somehow, and you're increasing costs, and you're basically normal standard tax evasion. So we'll see how that plays out, of course. Anyway, going back into indices very quickly. UK all-time highs yesterday as well. Boom to the upside here, looking good. At the same time, looking a little bit worrying, to be honest, because I mean, there is a chance for this one to reverse very sharply to the downside. And looking at the monthly candles here, it seems like it's a little bit overbought, but still has a bit of room to the upside, but still a little bit overbought. Anyway, we need a clear sign, but we're not getting that one yet. Ladies and gentlemen, let's jump into the currency world. Let's close off the indices. AUDUSD. So I talked about this, and I said to you, look, I am waiting for this one to get through one of these trend lines, and I know it's a very wide area, but to be honest, I really don't like it when it's like this. So I'm just trying to avoid anything, avoid touching it. If you're really looking for something short term, look, you can keep an eye on the high of this week. Near the 0.6629. If that gets cleared, we could go towards the upper side here of this, or should I say, we could go towards this downside line, taken from the high of the 30th of September of 2024. But if we do drop below this hurdle here, the low of the 26th of September near the 0.6520, then we could go towards this little upside line, which is drawn from the low of the 24th of April of this year. Like I said, not the most exciting pair right now, so just mentioning it there. Now, which one? The pair that is exciting is AUDNZD. Look at this. I mean, look at this animal. NZD is so weak that, oh my god, like it had rallied significantly. All the major currencies have rallied against the New Zealand dollar, and for now, look, I mean, this is just. This is, I would say, at the moment, yes, we're seeing a little bit of a retracement, but I wouldn't get, the bears should not get their hopes up yet, because there is still potential for some higher areas. And looking at this, look at this. This was back here at the end of September. This area that we reached, 2022, of course. 1.1490, that was a good target here. This is still something that I'm aiming for. Right now, what we're seeing, maybe we could class that as a little temporary correction before another possible leg of buying, so keep that in mind. AUDJPY, so of course we're watching the Japanese yen very carefully. This pair, our risk on, risk off monitor, as I call it, is showing some signs of willingness to go higher, basically indicating that there could be some more upside in the stock market as well. So risk on environment is not, we're not done with that yet. So long story short, keep your eyes on the barrier here, the 98.42. I'm watching this very carefully because if that gets cleared, a forthcoming higher high will be confirmed. Jumping into EURUSD, ladies and gentlemen. So, okay, this one's a little bit of a mess, and to be honest, I want to remove everything and start fresh. Look, we're in a way stuck. We're not really moving much, so I would say if you're looking for some higher levels, then maybe wait for a push above the 1.1919. But if that's a little bit too much for you to wait, okay, keep your eyes on this little hurdle, this 1.1779. Yes, we could then travel a little bit higher, but we could still find resistance. We could fail to in going towards the 1.1919. So you just be careful. That's why I prefer this hurdle anyway, but it's up to you. For the downside, I would prefer to wait for a drop below the 1.1645, something like that here, marked by the low of the 25th of September. If that gets cleared, amazing. I think I will consider a move towards this little territory right here, somewhere around the 1.14 zone. EUROJPY, I'm loving this pair. Look at this. I talked about it and I said to you previously that if we do drift lower, if we find good support near this upside line, then I'm going to consider a move to the upside. But right now there is the yen buying kind of increased despite the stock market drifting lower, and this is the point where I have to say that whenever we start seeing something like this, whenever, let's say, safe havens start to pick up traction even when the stock market is like rallying, then maybe there's an indication that we are due for a little throwback on the stock market, in the stock market. So just an idea here. Let's see if this is going to work out or not. But the fact that we broke this little upside line, we are now retesting it from above, from underneath. And I said it several times, if we do retest it, but we stay still below it, then there is, like I said, there is a chance for a drift lower. If you're not really comfortable with this idea, and I totally understand you, then you can keep an eye on the current lowest point of this week. And that's near the 172.27. If that gets clear, the forthcoming lower low will be confirmed. EURUSD. So there we go. We're getting that reversal. This is crazy. I talked a lot about EURUSD, and honestly, I am a little bit concerned because whenever this pair rallies drastically, it kind of follows. It is followed by a correction. It is followed by a correction, and normally that correction also happens in the stock market. Correction to the downside. Okay, let's like I said, I talked about this already in my previous sessions. Now let's take a look at GBPUSD. There we go. GBPUSD also a little bit annoying here, not much action, so that's why I have my levels here. On the upside, I have the 1.3536 here. If that gets cleared, I will go over a little bit to the upside towards the downside line right here. Then we'll see. Maybe it will hold, maybe it won't, but it's a problem for later. For the downside, I would prefer to see a drop below the 1.3324. That's the low, or should I say the low? Yeah, the low of the 25th of September, or actually, is it the? Yeah, that's the lowest point of September. So if we do drop below that, then yes, a forthcoming lower low will be confirmed. However, we would have to deal with the 200-day EMA first. Going further down the line, ladies and gentlemen, USDCAD. Now look, it could have been an interesting day for USD for US dollar, but oh, by the way, the US dollar. Let me actually just jump into US dollar. I forgot the US dollar index very quickly here. Where's that? There we go. So the US dollar index, and that one's going to be like the traders of the US dollar will be carefully monitoring the ISM number, which I talked about. So because again, due to the absence of the NFP, if somehow it comes out higher, better than the forecast, then great. Maybe that could strengthen the upside scenario here. But again, I said to you before, and I'll say it again, I prefer to wait for a break of this downside line. If that gets cleared, great, wonderful, more buyers could join in. We could aim for that 200-day EMA. For the downside, a drop below the 96.37 here is needed. So while we remain in this territory, I'm just observing the price action. So going back to the US dollar pairs, USD-CAD, where the US dollar is the base currency, USD-CAD still is showing willingness to travel higher, but I would say the upside could be limited near just a little bit above that psychological 140 zone. So look, USD-CAD does love these beautiful kind of round-ish numbers like 1.40, 1.40. Okay, the one round number, when you're not considering the last three digits, then it's for me, then it's a round number. But anyway, those beautiful numbers, let's call them this way. Let's call them this way. The 1.40, 41, 42. This is what this pair does like, and kind of okay. I'm not blaming it; it's easier, but certainly, like I said, it becomes interesting to watch how it climbs. At the moment, it's just balancing slightly below the psychological the psychological 1.40 zone. So where is that? There, high 1.3986. There we go. Um, it's like I said, it doesn't have much to go there. It could go travel higher. Yesterday it tried to do so, but let's see if we can touch the 1.40 zone today. USDJPY. So of course, monitoring this one very carefully. Look, it's back in this little range that I had before. I removed it because we violated it, but basically this was the little range, and roughly among those lines. Actually, I had something different. I think I had this one. There we go, 146.22 on the downside. So look, if we do clear this upside line right here, taken from the low of the 22nd of April, then I will go to the downside. I will consider some lower levels. I said it before that this little formation kind of looks like a rising wedge, not the most exciting one, but yeah. If it's going to break this upside line, I would say then I will consider a move lower. USD CHF, just a copy of a DXY, so we're waiting to see what's going to happen with DXY. Let's jump into commodities very quickly, ladies and gentlemen. Gold. Okay, look, yesterday. New all-time high. Let me just double check. Yeah, that's just by a fraction. Yep, there we go. A new all-time high yesterday. Almost hit that 3,900 level. I talked about gold in my sessions, and I talked about gold actually last week as well. I did a little piece here. Watch this if you're trading gold. So basically I'm in line with the market. I mean, everybody's waiting for the 4,000 zone. The only little thing that's stopping me in my head is that the fact is that when everybody is waiting for something, it kind of then it sometimes backfires. So I'm not saying that it's not going to reach 4,000. Okay, it could not. So it's always a 50-50 chance. But whenever everybody's anticipating something, it kind of tends to happen the opposite. That said, the 3,000 level, everybody was like crazy, like, oh my god, the 3,000 level of what are we gonna do, and then what are we gonna do? We're gonna hit that 3,000, and then we're gonna aim for the 4,000. So honestly, gold this year is on fire. I mean, look at the monthly chart here. At the same time, that's it. I mean, at the same time, I am worried. Why? Because it's an indication that a crash could be happening. Because look at this. I mean, last time when we had such a parabolic move in gold was back in 1980. And 1979, 1980. So then we had a financial crisis. We had a rally here back in 2011. Okay, the 2006 here, the stock market was experiencing. This is another moment here. So let me just. So this was another moment. So we rallied here very strongly. We hit the 1,000 level. I mean, that was something for gold. I mean, imagine this. Imagine if you could have bought gold with 1,000. I mean, I remember I bought gold at 1,200 and something. Just like a small little piece, but. It's whatever I could afford that moment, but yeah, like okay, now it's like it's worth the money, but probably need to sell it. I think I'm gonna sell it, but again, it's not financial advice. It's just my own personal kind of circumstances. Anyway, looking at this picture here, I would say this way, that then we had a correction. Whenever we get such a parabolic move, then we get a correction. So this happened as well. Then we were flat for a little bit, and then now we're rallying. Look at this. This is all a monthly chart. And how much more? I think the 4,000 looks quite attractive. I think it's quite doable. I did draw a Fibonacci extension, which is basically drawn from here, from this kind of this low to this one, and then to this low. So basically that's the lowest point of April to the highest point of April and to the lowest point of May. So if you draw the Fibonacci this way, then you'll see that you have the 161.8% on the Fibonacci extension right here, bang on the 4,000. So coincidence? Maybe. That's why I'm saying these Fibonacci's are nice, but sometimes they can be very subjective because, again, it depends on from where you draw it. Anyway, so I'm keeping an eye on this very carefully. I mean, I would love to see a test of that 4,000, and then we could maybe we could then reverse back down. Hey, who knows? Silver, silver is also on fire, and I mean, it's not melting. On the contrary, it is just flying high. Look. The $50 mark. I think if gold, everybody's watching the the 4,000. On silver, everybody's watching the $50 mark. So let's see if we can reach down. Platinum also near near the highs. Not all-time highs, but certainly kind of going there. Palladium, now this one's interesting, and I talked about Palladium. Look, it could become an interesting moment here. Palladium right now is trading at around 1,250, but it does have potential to go to 3,000. We were here. We were, on the upside here. We were at 3,400 levels. This is when the conflict in Ukraine started, and everybody kind of was worried that the supplies of palladium from Russia will be damaged. Will be kind of stopped in a way, and everybody needs palladium. But as we know, there are ways around everything. So the market continues to work. So yes, Europe continues to buy Russian gas, everybody continues to buy from every the trade continues. Let's say war is war, but the trade continues. The copper rally. Look at this. I mean, crazy moves here to the upside on copper. Okay, look, what can I say? Good move. I think that there could be some more upside on this one. So let's see what's going to happen here. Let's jump into coffee. Let me just double check. Yep, coffee. Okay, it's decent here. But yeah, this was the big drop here that we saw in April. Okay, sorry, I just went away a little bit. Coffee futures. Okay, this one did have a nice move to the 50% retracement, tested it, and then we reversed back down. Sugar is interesting and is actually trying to make its way back up. So I will say this way, that if we do clear the 16.69 zone, I'm aiming for that 200-day EMA. Soybeans are also interesting. It's an interesting topic right now because we know that the two presidents of the top two economies are meeting together, and the president of the biggest economy right now is going to try to convince the president of the second biggest economy to buy more of its of the first president's of the American soybeans. So yeah, we'll see how that goes on, because again, I think that China is not buying because of the tariffs that were imposed initially, and since it kind of calmed down a little bit, China didn't really reinstate the purchasing. And this is hurting the U.S. farmers. So we'll see what kind of agreement they will reach in there. Anyway, let's jump into the oil, ladies and gentlemen. There we go. Boom! I talked about this, ladies and gentlemen. Look at this. I mean, I released the video here. Still look WTI and Brent still look bearish. There we go. Boom, boom. I talked about this in the beginning of this week, and I said to you we were very close. After this reversing back down, we were very close to this key area of support around the 61.5 zone. And I said that if we do clear it and we do stay below it, I'm leaning towards that $60 mark. That's my aim for now in the short run. Then if that gets cleared, I'm aiming for that $55 mark, somewhere around there. But for now, everything's working out nicely. Similar story on Brent. There we go. Clearance of that $65 mark. There we go. And $62 mark is the next one on the Brent side here. And if we can, clear that one, I'm gonna go sub 60 towards the levels, towards the lowest levels of this year. Natural gas pushing back up here. Natural gas. So. This is, oh, actually, you know what? Wait. Henry Hub. Henry Hub natural gas futures. Yeah, wait. Where is it? Did I not put it in there? Anyway, yes, I mean, that is the one. That is the one. Why? There we go. Anyway, so that's the one. Why I got confused. I thought that I have the wrong one. Anyway, that's correct. NG1. Anyway, looking at this picture, look at this, 3.5 almost, and kind of we're back above that psychological 3 level. So that's in a way great. Pushing back up here. From the technical perspective, there is a moment here that we broke the downside line, taken from the highest point of this year. So are we going to go higher? Well, time will tell, of course, but at the moment, of course, it increases the chances of a further move toward maybe back towards that 4 level. Let's keep an eye on that one. And finally, for dessert, ladies and gentlemen, I would like to look at the cryptos, just a few of those, and Bitcoin. Beautiful rally. Beautiful rally pushed above this barrier. I talked about this. I talked about the this idea on Monday, and I said, look, we're waiting for a clearance through one of the sides of this. One of the sides or should I say, one of the trend lines. So I didn't care which one, to be honest. I really didn't, because I just needed a clearance through one of these trend lines. So did we get that? We got that. And there we go. We got the clearance on Wednesday. We pushed higher. On Wednesday I was off, so apologies for not covering this one. But anyway, 118 zone, 118,000 zone, we cleared that. So what I said to you, that if we do clear it and we do stay above it, then I will continue targeting the upside. My next target will be the 124,500, and that's the current all-time high, near the current all-time high. So let's see what's going to happen here. I'm aiming for the all-time high right now, as long as we stay above the 118,000 zone. If we do drop below it, I'm going to consider maybe a little bit of a retracement back down. Bitcoin Cash. I want to say BlackRock. Started thinking about where you can buy that Bitcoin ETF, and of course we know that BlackRock is one of the owners of the ETF. Anyway, Bitcoin Cash also rallying, pushing towards that 600 level, the psychological 600. So let's see if we can clear that and go higher. Ripple jumping back above the psychological 3 level. So if we can stay above it, I'm going to go to the upside. I'm going to be very careful initially. I'm going to target these peaks, and then we'll take it from there. Ethereum. Now this one is a little bit problematic for me. Look, if those other ones are going to rally, I think they will drag Ethereum after it. So Ethereum will break eventually this downside line, which we're monitoring very carefully. So keep your eyes on that one. And if we do clear it, then I'll go for this one right here for the almost the 5,000 level. So is this the all-time high? Yes, it is. So of course, keeping an eye on this little hurdle, this previous all-time high, which is around the 4,867. So let's not ignore that one. But first, let's not ignore the downside line because it's providing good resistance. Litecoin pushing higher. Look at this, boom, to the upside. We pushed back above this hurdle here. We pushed above the downside line, so everything is looking quite nice, I would say. Now we're getting a little bit of a retracement back down, and hey, if we can get a move, here higher, if we can get a rebound, I would say then yes, then that would be attractive. For me to consider lower levels at this point, I think I will keep an eye on this little inside swing highs, these inside swing highs, which are quite attractive near the 107.80 zone, something around here. If we do get a drop below those, I will start shifting my attention to the downside. Dogecoin, also a nice jump here to the upside. We're forming something for a rising veg pattern. So, let's not get way too excited with higher areas. But for now, as long as we remain inside the pattern, then yes, we could still drift higher. That's kind of the rule. But the fact that this pattern is a bearish pattern, that's my problem. So while we remain inside, yes, we could go higher carefully. But eventually, if the boundaries of this pattern are respected, or at least the upper side here, then this gives me an indication that we could see a reversal here, a drop to the downside here, a break below this upside line. And finally, Polkadot pushing back up. I mean, initially it looked like a goner. I talked about this. I said that, look, if we do fall below that 3.77 territory, there is a chance for a move lower. But if we get a pop above the 4.10 zone, something around here, then there is a chance of pushing higher, especially if we climb and stay above the 200-day EMA, around which we are now oscillating. So if we do stay above the 200-day EMA, I'm leaning towards slightly higher areas. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I really appreciate your time. Look, we had a great session. Join me on Monday next week. Yes, we'll see if the U.S. government can come back and give us some data. If not, we'll just have to improvise again. As always, try to look for something else, like other market movers. So keep your eyes on the market today, ladies and gentlemen. Stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I shall see you on Monday. Bye-bye.